Hello everyone, how's everyone doing? I hope everyone's having a good weekend. And I hope everyone's enjoying their weekend before our trading week. Have a promising week ahead. Decent red folder news, so hopefully we'll be expecting some volatility. And the use of the data that has been provided for us with the price action of this current week would come in great help for the following week. So my previous video was a market review on May 1st, and this is going to be a market review for May 2nd. I decided that I'm going to make this a daily series where I will try my best to provide market reviews, and I will organize them in a playlist so they are easy to view in order. And I will try my best to keep these too long because these are also for my sake. It is much more enjoyable and it's much more engaging for myself to create video logs instead of note logs. Mostly because note logs take too long and they're just too exhausting to keep on typing down my idea. I feel like on videos, I feel like I can just get my idea out better and I can be done with it there. And when I'm just rambling on about what I'm seeing, I sometimes talk myself into new ideas. And discover things I would have not discovered as if I was just typing down notes on my Notion. So I hope you'll stick around for the series. I'll try my best to keep it moving on for as long as I need to. And maybe I might get used to doing it like this and I might just rely on making video format market reviews instead of having a day reviews section on my Notion where I just type in everything on a page. So hopefully that would be a bigger help to me. Anyway, we're going to be reviewing May 2nd, Friday. This was NFP Friday of the week, as it is the first Friday of the month. And again, information should not be considered as an offer or enticement to buy, sell, or trade. Let's move into it. Here we have the E-mini NASDAQ June 2025 contract, daily chart, and the latest candle is the May 2nd daily candle, open, low, high, close candle. And you can see it engulfed the previous day candle, closing up and above it, and also touching into a new array that we had drawn on here, consequent encroachment of the balanced price range. With balanced price ranges, you would honestly not want to see the consequent encroachment of the balanced price range get breached, and in that case, if it does, and if you are expecting in this case for it to be lower, you'd often be on the wrong side. Obviously, this has to be used with further narrative, but from what we can concur, in my opinion, this is one of my opinion, that this imbalance here will not be held, and this high here seems as a promising objective for price to move on further. And this is operating under the understanding that we have closed through this wick here. We have closed through this daily volume imbalance, and now obviously we can flip its role and you can start to refer to it as the inversion volume imbalance. We can expect price to use it as support moving on. Closing through the premium with consequent encroachment here is also very important, as this level, as you can see, was held on Thursday, May 1st, obviously respect of how price opens, reaches up into it, moves lower, and closes just a little bit higher than its low. And then how the following day continues to trade higher and finds movement to close through it. And then there, after we close through it, we reach up into the balanced price range, close through the volume imbalance, and then just because we fell short of closing through the balanced price range consequent approachment, which is the midpoint level of this low here to this high here, and as you can see, it's a imbalance that lines up with another imbalance on the other side of the screen. From there, price closes, and then that finalizes the price action for the week. Now let's move into the more micro scale timeframes. Here's the 1 minute chart. As I mentioned previously, this day had 8:30 a.m. NFP, and here is the candle that showcased the news release. Midnight open was at around 19,987 and a quarter. We have, I don't have it drawn on the chart, but opening range gap is within this region. The exact levels of it is not that relevant to me right now because we have reflected the idea of a liquidity void or a area of support with this new week opening gap, which was formed in March 24th, 2025. Here we have the upper quadrant, the consequent encroachment, middle quadrant, out, and here's the high and the low. Yeah, and here is the first presented fair value gap of May 1st. I don't know why it says second. I made a mistake. I've been mixing up these past 2 days a lot. I don't know why. On my previous video, I kept referring to May 1st as May 2nd, and I'm still doing it to this day. So forgive me. Anyway, notice how prior to 8:30, price accumulated. And you can check for yourself on your charts as well for the rest of the day up until midnight open, or sorry, up until midnight open. Price pretty much moved around like this, touching in and out of the first presented fair value gap and just hovering around the area of it. Notice when we started to approach 8:30, as the bodies left the first presented fair value gap, price referred back to the upper quadrant of the gap twice, and then finally at 8:30, you can see how price uses the gap in accordance to news to send us higher, touching back into the week opening gap and going above that open to where we get to trade using the consequent equivalent level of the week opening gap, touching to the end log high and also the premium wick high that we had denoted on our daily chart, and I'll refer back to that really quickly. That is right there. Premium wick high, second group 2025. Premium wick high, second group of 2025. That level, we do not use it once and throw it away. We can use it consistently, at least for 60 days with 24 to 60 days back. And notice how initially the bodies respect the opening gap high, and then as price starts to kind of spend more time in that area, see that it shoots through it, runs through it, and then trades above the volume imbalance, fair value gap, and then this is prior to 9:30, so you can expect price to kind of slow down a little bit. We reach back into the premium with consequent approachment, which is the level that we reversed off of last time. And there we trade lower, generating, as you can see, with these smooth highs. A very important note and a saying, or not a saying, a phrase that I've picked up from ICT is when there is smooth price action, jagged follows. And this is what happens in the future. So we have smooth price action here, generating lots of buy-side liquidity on top of these highs, and sell-side liquidity within this run low to where 9:30 a.m. opens, and we get this move that pushes higher, touching the premium consequent encouragement one more time, finding resistance of it, printing lower, forming our first presented fair value gap here. As you can see, price runs down one more time, touching the new opening gap high and also touching into the premium wick high. As you can see, they kind of closely align with each other, premium wick high and opening gap high. Price touches this level one time, runs higher, fails to take out this high. As you can see, it kind of stagnates a little bit, touches into fair value gap, runs back higher, moves into this wick, and then from there we drop lower, touching back into new opening gap high, fair value gap, daily volume imbalance high, one back lower, run below that was resting at the 0.25 level of the new opening gap, and from there we take off, and then we start to shoot higher, pushing through a premium wick, using the premium wick now as a support level. Notice how the wicks here can stab through the premium wick level consequent enforcement, but the bodies never negate the idea of it there. 1, 2, 3, 4, look that perfect. Perfect close of the premium wick consequent enforcement. 5, 6, 7, 8, 9, 10, 11. 11 touches on the premium wick consequent enforcement. A big idea that I've also spoken about before on this channel is the switching of order flow. Notice how previously it used that premium wick consequent enforcement level as a resistance level, and then once it performed this second stage manipulation running down this low here, it started to use that premium wick consequent enforcement level, which is the midpoint of the wick, the premium wick of 27 March 2025, the daily candle, starts to use it as a support level instead of resistance after we have performed this one over here. Here we are, moving into a chart with a little more lipstick on it. See, we have a little more annotations. Let's start off from the left side, go on to the right side because you can get a little overwhelming. So, as I mentioned previously, this is a minor buy-side liquidity point, which would obviously be hunted within preferably the opening range. Notice as price trades lower, generating this minor buy-side liquidity, price initially sets a turtle soup low before it eventually runs makes it higher. Before we get into that, I'm going to get ahead of myself. Let's talk about the wick that happened here. This is the first presented fair value gap, and notice how this candle here, the consequent enforcement, denoted and dragged out in time. Notice how it uses the consequent enforcement once to send us lower. Once it sends us lower and does the turtle soup, the way that you are able to recognize that this is a true turtle soup is because the order flow switches right after we do the turtle soup. It moves from using the premium wick consequent encroachment as a level of resistance, and it goes from using the first presented fair value gap as a level of resistance as well within this wick here. See, as we reclaim it, price trades back into it, fills it to the high. Look at that, perfect. Does the turtle soup, and then from there, we trade higher and meet the minor buy-side liquidity. Why couldn't price just immediately start moving higher after we did the initial run down lower into the 0.25 level of the new opening gap? And the answer is it's just because it does that. Usually what you'd see, and more often than not, is that the second-hand manipulation is almost always evident in times that we have efficient price action. And you might say that this is a NFP Friday, and these days are known to not have the most efficient price actions, sometimes manipulate, and the concepts don't work at all times when it's NFP Friday. But in this case, it did. We got the true turtle soup. If you were to watch this in real time and watch this first present fair value gap and try to take a long towards the amount of liquidity, and you would get rejected and destroyed through the touching of this premium and consequent encroachment. Again, back to what I was saying, this is a true triple soup because it switches the role of an array. It switched the role of the array, this premium and consequent encroachment, and it switched the role of the first present fair value gap as well as the use of the daily volume imbalance. Notice how it was used here to send price lower toward the turtle soup, and then once we performed the turtle soup, price returned higher and completely negated the fact that we used the high of the volume imbalance as resistance once, reversing its role, and that's how you're able to know that it's a true turtle soup. Notice how the primary consequent encroachment used once as resistance, now being used as support, being dragged out of time. 1, 2, 3, 4. 4 touches that were all respected with the wick. That's perfect. Doesn't get any more perfect than this. The bodies don't even come close to touching it. And if you're too distracted by something and just to notice this wick, or if you weren't able to catch the idea of this wick being held, then you're able to draw out this order block that we have here, and notice that the bodies also remain within respect of the order block. The premium wick can act as a kind of anchor to have a point of return, to be able to have a point where you can say, okay, price can touch this order block, but it can also reach as low as into the premium and consequent quotient, and the price would still be valid to move higher from there. Kind of a projection of how low price can trade without it removing the idea that we're going to move higher. Quick note, I don't trade this, and doesn't matter if you do, it's just what ICD speaks about recently. Here is his Venom setup, where you would be longing this fair value gap here. We have a short-term low. We have price displacingly pushing through this short-term low, creating a SIBI, sell-side inefficiency by side imbalance. Spending an entire minute beneath this low, accumulating short orders beneath the low, and obviously you know that lows have pending sell orders. And this candle here helps achieve that goal of accumulating sell orders as well as turtle swooping this low here. But this soup here is not a part of the ICT Venom setup. This can be completely ignored, and you can only look at this short-term low here. Price spends time beneath that low, shoots back higher, making the gap that we have here a balanced price range. And notice how it also shoots up with a busy. After price ran through the SIBI with a busy, the entrance would be the ICT Venom setup. Fair value gap. From there, price returned back to the first fair value gap, back to the premium consequent encroachment, and then follows with what I mentioned a couple of seconds ago. I don't think it's worth it to repeat myself. But yeah, this is generally the opening range, kind of broken down. Here we have the rest of the day. It's really not worth to go into specifics. As you can see, it was very choppy, very sideways movement. But a highlight would be that we used the premium mix consequent encroachment, delivering all the way up towards the consequent encroachment of the balanced price range. We spent a lot of time within that area. So we left it once, accumulated again, return back to it, lots of accumulation. And then as we displace from it very heavily, we take out the lows that were resting here. And all of the sell side that was here, as you can see, very smooth price action, and then it becomes very jagged, rushing through it, accumulate more, spend some more time just trading sideways, drop as low as to near out to 20,150, then return back higher, the balanced price range here, price runs into that, makes it trade higher, comes back down, closes off around 20,204 and a half. Thank you all for watching. I hope you all learned something today. I hope you all were able to take notes and able to understand the daily anatomy of May 2nd. And I hope I was a overall help in everyone's trading. And as always, Lord willing, be safe.